Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And it's interesting to note that as a trader, if you don't set those profit and loss points of interest, you're going to have a hard time really manifesting a more profitable account balance. One of the things that I also share with people is, do you understand and do you accept the fact that there is a seasonality of markets? Most markets do have an ebb and flow of seasonality issues. And certain things when we respect to foreign currencies, there are end of fiscal year adjustments. There are governments that close their books and end their fiscal year end, and different governments, Japan versus Britain versus the Eurozone economies and the United States, all have different time periods where they end their fiscal year. Will that play an impact role on a currency move? And the answer is absolutely. So end of quarter, window dressing plays an important role. Looking at multi-international conglomerate corporations now will move funds to maybe address payroll issues. So there are certain things that do occur that under normal market conditions, and even in a situation like right now, and let's face it, folks, we are not in normal market conditions. We are in uncharted waters. And I like to quote President Obama when he spoke today, and he used the phrase, and I swear to God it was right out of the Star Trek movie, or the theme, boldly go where no man has gone before. We need to boldly go. It's like we are in uncharted waters, the undiscovered country when it comes to these markets, the meltdown in the banking situation, the potential recovery, the amount of stimulus that's being put into the U.S. economy here, as well as the amount of stimulus abroad, and especially in China. So there's a lot of money floating around. Interest rate adjustments also have an effect on foreign currencies. Look what's going on with Britain. Look what's going on in the Eurozone economies. And look what's happening in Japan. So when we take a look at what's going on, do these situations still have a relationship with seasonalities? And today, you and I are going to go over that. And the question is yes. So most markets do demonstrate seasonal price patterns, meaning they tend to make highs or lows near the same time period year after year. That doesn't mean that exactly the same day at the exact same hour of the exact same week of the exact same month they make a low. But it's more of an estimate that there is more times than not a price area where the market will make a low, and you need to be aware of that. Also, if there is a certain time of the year that the market tends to peak out, how would that information help you? Well, while the media, and then I say media, let's call it what it is. When you're watching financial news on TV, CNBC, they're reporting as to what the current market is. They don't want to be prognosticators and say, hey, this trend could run its course in the next 2 weeks. They're telling you, in fact, you probably are listening to right now how gold prices are rallying to new highs and pressing that $1,000 mark, and how the dollar is so strong. No one's really talking about potentially that this market is due for a turnaround soon, and here's the reasons why. We don't really hear that often. We hear a lot of times when markets make extreme highs or extreme lows, that's when the media gets the more attention to that particular item. We call that taking almost a consensus or contrarian point of view. But stocks, commodities, and especially foreign currencies have a strong tendency to demonstrate seasonal patterns, but these moves can either be muted or magnified, as we have seen, magnified price moves in the last 2 years, depending, of course, on economic turmoil, political events such as presidential elections, and, of course, fiscal and monetary policy changes. Now, fiscal policy change is when a government changes laws, like we're seeing now with the stimulus package. Monetary policy is generally controlled or influenced by the Federal Reserve when they set interest rates or bank lending rates. So we have, or they set repo rates. So we have monetary and fiscal policy changes that can affect interest rates. Interest rate movements, obviously, is what makes money move, and that's what you're trading when you're trading foreign currency, money. You're trading money against the U.S. dollar. Now, the last time I was on, pay attention to this chart because this is the exact same chart that I went over when I was on way back, and I think it was in November. And what I discussed back and then was to tell people and to alert people, I'm going to get my little pen up here, is that the seasonal tendency for the market, I'm not big on that color, so let me go over and go to pencil. I'm going to erase that. The tendency in the last 10 years that the euro currency has been around has been for the market to generally form a bottom about the third week in October, if you see that. And then the market struggles, but then we normally see the market show a strong price advance going into on or about the 1st or 2nd of January. And then we see the market after January 1st kind of sell off, stabilize in February, which is our current month, and make a secondary low sometime around the last week of March. So again, we generally trade lower from summer. By October, we trade up into year's end. After the first of the year end, we trade down. And then from March going into summer, we trend higher. Now, some of you may say, well, that's hogwash because the euro currency, all it's done is gone up since its inception, and then it went down last year where it's at right now. And that's not necessarily true if you weren't really following this market. Because here we have the chart that I did before the move even occurred to warn people, listen, in October, we may see the market bottom out in the third week of October, take off into year's end, and so you have a window of opportunity of almost 8 weeks for a reversal move. And so what one would want to do is look at, obviously, for a position trade, some type of way to capitalize on that seasonal play, and one can use options on that, especially with using the ISE products. Now, interestingly enough, Steve and at the ISE had invited me to speak for them, on behalf of them, at the November Las Vegas Traders Expo. And I also gave the same presentation and said, folks, you want to be aware of this. And we were looking for a big move. Let me show you and go further and show you what really has occurred. This was approximately when we were talking about our presentation. This is the exact move. We went from a low of around 123 and change. Notice the time frame, about the third week of October. And we rallied an amazing move over 146 level, as you see here. And notice when that occurred, in December. But starting on or about the first week of January, we've gone in a downtrend. Now this chart was from this morning. So this is the actual euro currency. This is the daily chart on the euro currency. And as you can see, this is really an amazing study in how the market has respected its seasonality.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.